You, Zaid. Moving to the next startup, keeping the same industry, health tech. Welcoming Hossam Jamal, co-founder and CEO of Health and Life.
Hey everyone, I am Hossam Al Jamal, co-founder and CEO for Health and Life. I am working for health life sector for a long years, but when I need to go to a dental center, I have to think, but I got struggled because we have in Riyadh more than 600 medical centers. So the decision was very difficult to reach the appropriate health provider to know where is the best price to take appointment. It was very difficult. So we start. Okay. So we start our solution in 1992. Our solution aims to enabling the patient to take appointment by one click, have the best price, have all healthcare services in one platform, and enhance the quality of service with generative AI. Our product, we make it easy, simple, organized, to make it easy to patient to book the appointment. Our business model starts from first stage. We making contract with the health provider at high discount. That discount reach to 50%. After that, we charge commission. Our commission 10%. So we give the patient the best price. Market size is very huge and it's amazing. We have in GCC more than $200 billion market size, and we have in Saudi $100 billion, and we have in Riyadh only $30 billion. Our competition, we make it smart. We go to the customer centric. So we start with the availability of service. We combining all healthcare services in one platform. The price, we give the best price. Generative AI, we enhance the quality with generative AI, ability to integration with the provider system to give a confirmed appointment. It's very important for the patient, providing service for medical insurance holder. Our traction, even though we are working with just limited marketing budget, most of this number, we make it by organic reach. We have more than 16,000 users. We have transaction, and we have revenue more than $100,000, inshallah, 100 billion, 100,000 now. And we have gross margin as $11,000. Our ask is $500,000 for 10% of equity. Our first milestone to reach in revenue $4 million, and user acquisition, we aim to reach more than 200,000 users. Our team is big and huge, have a diversity of knowledge in different aspects of the business, have a long experience in medical sector. Thank you, Health and Life. Health and Life is a Saudi company, aims to participate in changing the future of healthcare. Thank you.
Thank you. Yeah, welcoming Islam Hijazi from UAE, founder and CEO of Kayan Healthcare.
Hello. Yeah. Assalamu alaikum, everyone. This is Islam Hijawi, founder and CEO of Kayan Healthcare Technologies. Kayan Healthcare Technologies specialized in claims, insurance solutions, clinical edits, and integration. Our journey. Actually, Kayan, the first establishment for Kayan in my heart. So then it was established in UAE in 2020. Early 2021, our product already started to be available in UAE market. Then in our journey, we expanded 2022 to Saudi, 2023, we expanded to Omani market, and inshallah, we are looking to be expanded to Qatar around end of 2024. Then actually, whenever Kayan started, we started to analyze the market. So Kayan conducted a deep market research to identify the key challenges. So the first key challenges, it was like financial losses. Financial losses came from outdated solutions along with the new mandates from the authorities. Second one, it was like the efficiency, workflow between payers and providers as well as with the authorities. One size solution. So there is no generic solutions to help payers and providers to communicate with each other in the right way. So this is one of the things that we are going to emphasize today. Finally, double messages from vendors. I mean, if in each vendor has different solutions, each solution could help in one direction. So those double messages makes kind of miscommunication between all parties. Kayan Healthcare Solutions, straightforward. We have provider solutions, payer solutions, as well as we have mutual solutions. Provider solutions, we started with RCM solution, then Kareem benefits. It's like benefits edit solution in order to develop or to build the table of benefits as per the insurance company's agreement. Then accordingly, the providers will be able in order to perform well in terms of the to avoid the rejections of the the managerial rejections. Bayan, it's a clinical edit in order to clean the claims clinically before submitted to the insurance companies. The mutual solutions, Tabadul, it's a dashboard, helps both parties in order to track the claims. Aman Connector. Aman Connector, it's the integration layer offered from Kayan in order to connect providers and payers with the post offices, as well as in case they need to be integrated directly between both parties. For payers. Sayan, it's a clinical solution linked or mapped with the denial codes in order to get back with the providers with the feedback as per the clinical evidence base. Lean, our story today. So we'll emphasize on it. So Lean, it's like auto adjudication solution, helps the payers in order to adjudicate the claims in very simple way, as well as it will be with less effort. Should be moving. One more. So why Lean? So we talked about Aman, we talked about Sayan, and then now we are going to talk about Lean. Lean, it's a combination of different solutions in one solution. As we said that one of the problems in the market, we need a generic solution in order to cover all of the mandates, as well as whatever mandates comes on the way, it will be covered as well under this solution. It's a combination between clinical and benefits, clinical, pharma, and benefits edits, integration, as well as everybody talks about AI. So let's take the chance to say that the system supports AI and data analysis. Since we are talking about combination of solutions, means that it comes with the minimum integration. So minimum effort, then accordingly, the solution helps in order to configure whatever data needs, whatever table of benefits or whatever benefits needed in order to be updated in the solution. That will be helpful in order to review and to adjudicate the claim in the right way. Sure, whenever we are talking about all of this, the cost will be very simple. It will be very limited cost. Then finally, it's like it will be helpful. It will be like friendly user solution. Okay, so Kayan. So very simple. The important thing for Kayan, the main approach for Kayan, in order to focus on our clients, to focus on our products, we need to make our clients to be our ambassadors. And really, during the last journey, our clients, they are our ambassadors. So then let me quick, go to the point. Tell me to. So anyways, our future map to expand our products as well as to expand our market share. Then finally, this is list of our ambassadors. Next. No, there is.
Thank you.
We skipped ask.
Thank you.
No, we skipped ask.
You can ask.
Okay. Anyways, our ask it's five. We have two ask actually. Ask number one, we ask about $500 in order to develop lean and advocated in the market. Specifically, now we are looking for GCC market. The other ask we are looking for a partnership with the QLM and whoever stakeholders interested with those kind of solutions. Thanks for everyone, and sorry for this 1 minute extra.
Thank you. Moving fast to the founder and CEO of Zyla, coming from India. Zyla, they are trying to be the leading AI healthcare platform in India. Speaker.
Hi, good afternoon, everyone. It's a pleasure to be here today. I'm Khushboo Aggarwal. I'm the founder at Zyla Health. We're based out of New Delhi, the capital city of India. It's my first time in Doha, and I must say, it's a beautiful city. I've been surprised pleasantly since yesterday. So just on my background, I'm a pharmacist MBA by training. I'm extremely passionate about healthcare. That's what I live and breathe. And we exist to improve the health outcomes of people globally. I was a healthcare consultant with Deloitte and Monitor Group previously. A lot of work I did in the US with large insurance companies such as Aetna, Humana, Blue Cross, Blue Shield, and others. Back in the day, while I was stationed in California, the purpose behind Zyla came to life. My dad happened to have a heart attack suddenly, based out of Delhi, and I had to fly back in 2015 to save his life. He lost 80% of his heart pumping. Thankfully, we saved him. The next 24 hours while I was traveling were quite difficult. I didn't know whether I'll see him again. We saved his life, and next 1 year of ordeal, running hospital to hospital, I realized that although he had all the means, he had the best insurance policy, he had a caring family, even though we could not read the symptoms in time. And that made me start Zyla. Back in 2017, I founded Zyla Health. Zyla in Hebrew means a princess. It's a confidant that will stay with you, your family, to improve your health. Our purpose is to help people with better health outcomes. We started direct to consumer when I launched in 2018. We worked with chronic patients over a 12-month continuous journey to improve their health. And to scale eventually, given my work in value-based care in the US previously with Deloitte and Monitor, we knew that we had to integrate with the one entity in the ecosystem that most cares about patients being out of the hospital and with better health outcomes, and that were insurers. So today, very happy to tell you that we have launched across insurance companies in India and now looking to launch globally. And given we have global dreams, we are very particular about how we store patient data. We are ISO, HIPAA, GDPR compliant. We've also filed for our FDA clearance, which will come in anytime this year. Overall, what we do clinical risk management for insurance companies today, and we're working with the best in class in India and very soon globally. Aditya Birla Health Insurance, Max Life, Care Insurance, and similar companies where we have deeply integrated Zyla into their ecosystem, be it their data lake for data exchange, or be it the Zyla care management system into their app with deep integration so that we can improve the life of the riskier populations of these insurance companies, thereby reducing their cost of claim. So it's a true win-win-win where insurance companies reduce their risk and their costs, the patient or the end user improves their health, and Zyla gets to serve its mission of improved health outcomes. The formatting has gone for a fizzy here, but sorry about that. What we do on a day-to-day basis for an end user, we identify the early warning signs. So we onboard a user on a 12-month continuous journey. It's a tech-enabled platform and an in-house care team. We identify the early risks, be it a user with hypertension or a cardiac issue or diabetes or obesity or any active living symptom. Without Zyla, they would end up in the hospital or they may end up losing their life in an untimely fashion. Just to give you some jarring facts, in India, for example, the average age of a heart attack is 50 years, while in the US, the average age, any guesses? Is 69 years. We are literally 2 decades behind a lot of countries on this side of the hemisphere compared to the Western countries in terms of how a user ends up with their chronic disease management journey. We identify these policyholders with active health issues and symptoms, put them on a very structured care pathways using a proprietary algorithms and care management system along with an in-house care team. We are able to actively improve their health and reduce their hospitalizations in the future. We work with these leading logos, as I said. We have proven outcomes, live partnerships for multi-years now, where we've reduced the claim cost. We have improved the NPS or the promoter score of the end user, and we have showcased high renewal rates for these end users. And all of this through deep API integrations, real-time data syncing of our proprietary product with our clients. This is our proprietary system. We have a 24/7 care management chatbot with a human escalation layer for the end user. Our 3 proprietary engines. Athena is an anomaly detection engine. Imagine anyone having a symptom. Athena real time is studying 100,000 users who are with Zyla under care any given point. Athena is studying their longitudinal records and identifying what symptoms, what health issues need attention, and is able to cross-relate all disease conditions with other medical data of the user, escalate it to the human at the right time so that we can take timely action. Leah is a 24/7 chatbot with a human escalation layer. It powers our app, which also integrates with our clients. Iris is our personalized health plan engine. So we are able to personalize a plan across a multi-pillar lifestyle and medical interventions for the user. This is their medical history, their lifestyle, what they eat day to day, their data we get from our clients via APIs and so on. All of this
Thank
data
you.
is stored in medical coded language such as ICD-10, which is very actively used by insurers.
Thank you. It's already 5 minutes.
Yeah, just one.
Ask, please.
Yeah. So we have proven a 30% reduction in claim rate for our insurance clients and a 10% improvement in the renewal rate, as well as reduction in the claim cost of the end user. We are looking to scale up these partnerships across Middle East now. So any like-minded companies that we could partner with to take this global. We have raised $4 million recently, November 2023, operating at an ARR of $2 million. The company grew 2.5x within the last 1 year. So we're opportunistically also open to raising funds for global market reach out for Zyla Health. Thank you so much for your time.
Thank you. Quick reminder for all our startups, we have more than 30 VCs and CVCs present, so please use the networking lunch and these short breaks to keep pitching to them. Next startup is solving a pain for me personally, which is dental insurance and dentistry. We'll welcome Hisham Safadi, founder and CEO of Udenz.
Thanks, Aicha. Hi, good morning. My name is Hisham Safadi. I'm the founder and CEO of Udenz. Ziad was saying that it's 1 of 10 will have a problem because of the diagnosis or will be killed because of the diagnosis, but everybody is having a dental pain for sure. And everyone is looking for a solution for the dental pain. Udenz is a platform which is being since 2016 in the MENA region. We are having over 12,000 dentists and over 100,000 users for our platform, which is giving them all the possibilities of booking and having EDR systems, and which is empowered by AI. But what we did is that we had created the first standalone dental plans that can be bought by individuals and it can help you not only to treat your dental teeth, but also to have a better smile. So the market view in UAE, especially the dental insurance, is estimated at $500 million US, and that's including also the insurance claims and the dental policies which is being sold there. And there is with the mandatory schemes that had been there, what we are looking for through Udenz plans is to integrate it with the SME plans, and also individuals can use it with their plans even. As I said, the dental insurance currently, we are can save cost on your treatment, not only the preventive treatment, but also the cosmetic treatments. And in Middle East, and we are looking for the whole region to extend our offering there. Udenz, you can have, through our platform, you can register immediately, and you can, within 6 questions, we can offer you what plan is better for you, so you can vote it immediately. It do not require so much of details. It's only about your, how long is your teeth being preventive, or did you check it in the dentist before? And then you can have the treatment covered instantly. I'm happy to have one of our partners where we'll be launching this in June in UAE. So for the insurance company, this is an easy solution to enhance their plans and to enhance the offering for the SME companies, for individual even, because we had within our platform, we did a full benchmarking for the treatment and the burning cost, and that will help them also to reduce the claims where our engine is taking care of that. And for dentists, we are very careful in choosing the dentists who are within our network. And those dentists are being trained, educated about our plans and how they can benefit from it, at the same time offering the best treatment for the patient. We are offering 3 plans currently, and those with annual limits, and it can always open a new cosmetic treatments as long as you are continuing with our plans. As I said, we are always focusing on the technology, and we are looking to set up in most of the locations, major locations in GCC and then on the MENA region. Udenz Insurance is being connected through our own AI, which is including the digital TPA and the Aura LD, and it can be also used through our QR system. And we are rolling in June 24, and we are expanding until the end of the year. That's it. And this is what we are projecting in the next 3 years to reach $1.5 million in gross profit, and the gross premium to reach $15 million. Our team is mostly, we are women empowerment. Through our team, we are having the technology, the marketing, and myself, I'm a dentist. And what we are looking for partners, especially insurance companies who can fronting our offering for those plans in the region, in Qatar, Bahrain, and Oman. And Udenz, since last year, we are on a profit of almost $500,000. But what we are looking for partners to take this product, which we know it's a unique product, into the market. It will solve the problems, and we believe that smile is a fundamental right for the people, not only something with cost. Thank you.
Thank you. Thank you. From human beings to cows, cattle, InsureCow, our favorite startup, right? So we're welcoming Tasvir, from founder and CEO of InsureCow from Bangladesh.
Hello. I guess you are getting bored with the human already, so we actually brought cattle in between. So, today I will take you through a journey for resilience, innovation, and impact. So meet are one of our earlier customer, Amina Khatun. In 2019, she lost one of her cattle, and it took around 3 years for her to get out of that financial stress. After getting into InsureCow's services, she's now having 12 cattle within less than 1.5 years, as well as her entire family is getting enrolled into our their insurance policy. Actually, InsureCow offers global smallholder farmers asset and financial access through AI-based animal monitoring and biometric identification. The problem is, the smallholder farmers all over the world often access to finance, asset security, and digital record keeping and farm management tools. On the other hand, the financial institutions are struggling with high cost, inaccuracies, as well as limited market reach. To solve this issue, we have created a model, AI-based model, that actually help to identify the cattle like this. Oh, I guess, yeah. The video is not working, I guess. Sorry, you just actually take a camera, you just take a photo of the cattle. It will actually recognize, its identity. So through our system, we are also, it's not working actually. Okay. The services we are actually giving right now is, through our services, any farmers can access to the cattle insurance services, as well as, they have get their family insurance, health insurance, as well as farm management tools. On the other hand, through our financial inclusion services, any insurance, any farmers can actually get to access to the finance. The global market share, it's $1 trillion market. 500 million farmers are living their livelihood through this industry, and their unmet financial requirement is $240 billion. These are a local market scenario. We have 26 million bovine population. Only 3% is under insurance policy. So huge opportunities there. We are actually earning. Our revenue model is hybrid. We are earning through farm management software, as well as insurance platform and financial inclusion services. For the last 12 months, we have actually generated around 309K worth of revenue, and we are EBITDA positive. Our competition, Divara and StatLogic, is using similar kind of technology, but not providing the end-to-end services like us. Our team is the strength. We have 120 years of cumulative experience in business development, insurance, and as well as dairy management. We are asking 1.5 million. With that, we want to actually reach ARR of 6.7 million within year 2026. We have been recognized by multiple institutes. Last year, we have been champion in GITEX Supernova Challenge in InsurTech category. With that note, if you have a meal today, thanks a farmer. If you want to change their livelihood, join us. Thank you.
So we'll make sure to fix the speaker issue during the break. Okay, so from Bangladesh to Morocco, welcoming Yassine Rahmi, founder and CEO of SYGMA.AI. SYGMA is an end-to-end SaaS platform for motor insurance.
Hello, everyone. Assalamu alaikum. Right.
Down.
Okay. So Getting reimbursed from motor insurance sucks. I think all of us here have stories. It's a lengthy process. It takes a long time. And I know, I don't know in Qatar, but in Morocco, we have so many bad stories about that. Yes. So clients want to be reimbursed faster because they want to go back to their livelihoods, especially professionals. They want their cars to be fixed. They want to go back and drive. Insurance companies want to pay you faster, but they cannot do it. Why? Because of fraud, that's number one, and the manual process it takes to get from the first notice of loss until you get paid. So they rely on third-party external assessors, experts, garages. There is so many manual processing. Nobody has a database of auto parts, how much it costs. And of course, there's so many complex insurance clauses. I'll go back, I guess. Can you go back one? So the insurance company's dilemma today is how can they pay you faster without being frauded? So ladies and gentlemen, my name is Yassine Rahmi. I'm the co-founder and CEO of SYGMA.AI, along with my co-founder Faisal, who is an expert in AI, and the other Yassine, who has more than 25 years of experience in insurance. We came up with the best solution for this. So our solution is simple. Using the mobile phone, taking a photo of a car that has been in an accident, we are able to detect damages and estimate the cost of repairs. So how does it work? So a client or an assessor can just open his mobile app, put the paperwork, opens the car, and then takes photos of the accident. It takes less than a minute to do so. And from the back office, we have this information live, and the AI detects all the damages, extract all the information, and we have an estimate of how much it costs. So how does it work in Morocco? Once we give the price, the insurance company can call the client and propose a fast check, fast settlement. Our company has been working with two leading Moroccan companies, which is Wafa Insurance and the Insurance for Transport. We have been financed by the European Bank of Reconstruction, have been in many prestigious programs. So the key figures is what? We are able to detect damages in 5 minutes. We do the fraud detection mismatching at least 90%, whether people try to change the extent of the damage or whether garages or experts wants to overprice the quotation. Okay. Our target clients, of course, is insurance companies, especially InsurTechs. We have been working with a lot of InsurTechs who want to digitalize their whole process. Our secondary target companies are fleet managers, rental cars, fleet management, who are looking to digitalize the whole claims, but at the same time who are looking to detect damages with drivers. The market is huge. I just want to point out two numbers here, that the fraud in Africa is $5.6 billion. It's almost the same number as the MENA region. And the second number is we have a youth generation, and this youth generation is looking for digital solutions. So we think that the insurance companies who are going to win tomorrow, who are the insurance companies who can digitalize the underwriting and the claims processing. The competitive landscape is huge. There are at least two unicorns in this space. However, most of them are in Europe and in the US, non-existent in Africa or in the Middle East. We understand the African market better and even the MENA market. Why? Because we have a localized pricing logic where we tend to repair cars a lot more than replace in comparison with Europe. At the same time, we have advanced LLMs. I go back to the presentation of Gemini. We use some Gemini and GPT to understand contracts and classify them. This way we can give the right pricing. And the same thing is we are keen in data sovereignty, where our solutions is exportable and can be implemented in each country's local warehouses. Our revenue model is clear. With insurance companies, it's by file. We are charging Moroccan companies $25 per file instead of 60. They're paying today for human experts. And it's a yearly contract whenever it's just normal expansion for underwriting. I'll go for the ask. So our ask is $500,000 and a local partner in the MENA region where we can expand and test our solution. Thank you.
Thank you. Can you give it to them. Thank you. Closing with nettle AI. So our friend Andrea, he came with his AI chatbot from Slovakia. And then we can have quick coffee break. Not a coffee break, but people can bring coffee, right? Because it was a long session. It was long.
Thanks. So my name is Andre, and I'm a co-founder at Nettle. At Nettle, we are delivering engaging customer experience for service and sales journeys at the moment of need and in the channel of the choice. Chatbot, voicebot, or digital human is a way to deliver the do-it-for-me experience for nowadays and beyond. Imagine walking into a bank branch. We will display a hologram in front of you, and you can start asking various banking-related FAQs. A digital banker will be able to recognize the intent and reply back to you. You don't have to dream anymore. This complex solution has been operational for more than 3 years in a flagship bank branch of Erste Group, one of the largest financial services providers in Central and Eastern Europe. Can you play? Okay, so please stop by in our stand and you can experience talking to our digital human avatar. Our technology is really flexible and we are working with several verticals, while the most dominant is financial sector at the moment. Customers like Allianz Generali and Vienna Insurance Group have incorporated Nettle in different areas of operations. We specifically choose this domain because of the fashion we communicate with our families, friends, or colleagues has changed, and responding to this change is fundamental for businesses to adapt. At Gartner, they predict that 80% of customer service organizations will kill native mobile apps and replace them with third-party messaging platforms. Nettle is ready to respond by delivering cost efficiencies in communication while making it convenient for customers. We build AI-driven complex conversational commerce or marketing solutions to enhance customer experience and drive business results. To guarantee business results, we offer single chatbot backend suitable for multiple channels. This also prepares you for future interactions via Google Business Messages, RCS, and digital humans. Besides regional achievements, we are globally the first company with Greenline for chatbots in Google Marketing Platform and Google Business Messages pioneers. I'm happy that after being accepted into the InsurTech Hub Munich, the FMX largest insurance accelerator in APAC, we are proud alumni of Plug and Play, and we recently made it into Swiss InsurTech Hub. business results, our solutions are significantly lowering cost per acquisitions and increasing engagement rate. And our banking FAQ chatbot reduced the number of inquiries to the call center by 80%. Currently, we can help solve a growing number of insurance pain points, like new client acquisition, FAQs, assisted insurance product shopping, reporting insurance claims, client service or troubleshooting, data cleaning, and early collections. I have mentioned Google Business Messages, a new channel available on our phones waiting to be used on both iOS and Android devices. The channel for the cookieless world with laser-sharp retargeting possibilities. This slide shows an example of how a chatbot can be configured to sell car insurance in the Google Business Messages channel. We have ready claims bot for the insurance industry. High volume automated claims lodgement, the ability to allow insurance to handle around-the-clock assistance during the peak periods, like natural disaster events, significantly taking pressure off the call centers. Conversational styles and extras like OCR makes claims reporting process simple, speedy, and efficient, exactly at the point insurers need it the most, while keeping the customers at the center. Insurance can focus on what counts, getting the customers back on the road as quick as possible. Well, I didn't have a chance to introduce our digital humans, unfortunately, so please come and visit me and have an opportunity to speak with them directly. Thank you.
Sorry for the tech problem. I know that Aicha, in the wake of caffeine rush, promised you coffee, but it's not yet there. So what we will do, yes, we will change a little bit the program. We will have the panel discussion that is promised, and we will have to do this now. And we will have 30 minutes of, I believe, a really high-level introduction and panel discussion on the interest in InsurTech investment landscape. After that, we do the break for 45 minutes. We should restart at 1. So we have time to get a coffee and eat something. And then we restart at 1. We see a couple of pitches more, I think 6 or 7. And we have the NVIDIA program. So we should be back on the timing itself. So panel, 30 minutes. And after the panel, we do the break and have some lunch. So I would like to ask, I think I have it with me. Yeah, Richard, Ali, Alvaro, Divyat, Carl, can you please join me on stage while we are getting our chairs on? Thank you very much. It's a great honor to have you with me on stage. Please join, and maybe we can welcome people. So please join me on stage. Yeah, look, let's do it. You come here. Can we put this in? Can you put it next? We don't see each other. Okay, thank you very much, Carl. Yeah, that's fine. It's a little bit of a strange seating, I have to say, yeah, for a panel like that far away. Maybe we just take the chairs and we move it a little bit closer. This is maybe better that we see each other, yeah, and actually can talk. Thank you very much. Okay, Don, you need the mic, yes. And the timer is not 5 minutes, please. Okay, can I have a timer 30? Thank you. Can we do 2 mics for persons? Okay, perfect. Thank you. Good. Thank you very much. And thank you very much for joining us and being here. Sorry a little bit about the timing itself, but this is what we do. So with me on stage, and I would rather give you the word, or maybe you can do a quick introduction to all of you, each of you. Who you are, where you're coming from, and then we deep dive into a couple of questions I want to ask you. Let's start here, Richard.
Thank you. I'm Richard Kunze. I'm one of the co-founders of Integrum. We're a US-based buyout firm, and our focus is around insurance services and technology-enabled business services with a team that have been investing in the space for too long, 20, 30 years. So that's our background.
Good morning or good afternoon. Carl Bauer, co-founder of EOS Venture Partners. We are exclusively focused on insurance-related venture capital investments. We manage about $250 million in London and in the United States, but invest and source globally. And thanks for the invitation.
Hi, everyone. My name is Ali Garamian. I'm a partner with Anthemis. I was here last year, so thank you again, Lars, for having me again. Anthemis Group is a fintech asset manager based in London and in the United States. We have roughly $1.2 billion AUM, which we manage on behalf of primarily corporations such as banks and insurance companies that are looking for exposure to venture capital within the fintech and insurtech ecosystems. So thanks for having me.
Hi everyone, good morning. Divyat here. I'm part of Dubai Future District Fund. We're a government-backed fund from Dubai. I was also here last year, so thanks for having me again, Lars. We invest in fintech and other deep tech ventures building out of and for the UAE market.
Hello everyone, my name is Alvaro. I'm part of Speed Invest. We are a venture capital fund mostly based out of Europe. We have been around for 11 years or so. And around 5 years ago, we started investing outside of Europe. That's the part that I head for the fund. And with our outside of Europe thesis, we mostly invest in fintech and insurtech across emerging tech markets in the world.
Thank you so much for being with us. I think the audience sees that we really have found the investors that are relevant to our market. I think interestingly, all of you do invest in InsurTech and insurance company, but you do it slightly different, and that's what we want to work out. But before that, maybe, Deepak, can you quickly give us a summary of how you see the last 18, 24 months in the market itself? Because obviously there was a big change. There was a boom, and then there was a fall down, and now I think it seems to be stabilizing. But maybe you can quickly explain a little bit more about how you see the investment landscape on InsurTech right now.
So, I mean, if you look at InsurTech specifically, I think it's pretty much followed a similar trend to fintech in the sense that obviously there was a steep hike in 2021. And right now, I think 2023 was actually pre-COVID levels and slightly below that, to be honest. And I think from that sense, from a funding perspective, it might remain even lower than 2018, 2019 levels. A couple of reasons. I think obviously the mega rounds will still take some time. Public market valuations are still sort of recovering. I mean, if you just look at the InsurTech indexes that are listed, you look at some of the listed companies like Lemonade, they're about 70-80% down. The other sort of trend, which I can probably sort of sense, is that we will likely start seeing more B2B solutions being funded rather than B2C, obviously different capital requirements for them. I think lastly, there also could be slightly on the semantic front that a lot of InsurTech won't really be InsurTech classification. You'll have a lot of AI and healthcare companies that are sort of building solutions that will lead into InsurTech. But yeah, I think overall, I just sense that it's going to be more enablers rather than consumer-facing digital insurance companies that will be funded in the next few years.
Yeah.
6-7 years ago, I guess the world discovered, or part of the world discovered insurance. Insurance is an exciting place because there's risk, and risk goes from the traditional risk protection to eventually prevention and prediction. So it all sounded very exciting, and it is still today exciting. Insurance, people realize, is dealing with a lot of data. That's also exciting. All that was right, but I think that there was a flaw in the beginning, which was that insurance is also quite easy to change and easy to implement in terms of changes. And I think that's where quite a few fingers got burned early on, with also B2C models, which turned out to be very expensive and very difficult to implement. This being said, it's for us a kind of normal evolution especially on the B2C side, where we are kind of quite cautious also in terms of client acquisition costs. As a result, we've seen pretty large market corrections in the publicly quoted, as well as also privately quoted valuations. We are not surprised by that because also there's been a lot of kind of learning effect among the investors, which was necessary in order to understand really what is insurance, how do you value insurance, and how do you integrate insurance. So we are in a second or third chapter or whatever chapter in the investment evolution. I don't know how many chapters that book has, but it certainly has a lot of chapters. And we're now seeing a kind of helpful consolidation. You hear the stories, of course, Lemonade down, but you also hear, and you will hear more stories of more mature insurtechs who are going to face increasing difficulties of having been overvalued in the journey, which will need a breakup. I think that has tempered interest and valuations for companies which are somewhat more mature than the early startups, but it's a helpful process. I think the very promising and very interesting development is that we continue not only to see some really good innovation in the insurtech space, and some of the presentations today and later this afternoon are a proof of that point, but also that there's a really good maturation of talent coming into that space. There's a lot of more experienced, mature management coming into the space from existing carriers, brokers, software companies, who really understand the pain points, who really understand how you deal with insurance. Insurance is a complex product, whether you like it or not. The sales process is complicated, the regulators are there, and that is going to help lift the whole ecosystem even further. We are exclusively focused on insurance-related innovation, but we are excited to see that insurance is becoming ever more present in so many more areas through a kind of trend of embedded insurance, but also integration more and more with other financial services, banking, credit cards, but also a lot of industries by way of IoT, whether it's the cars, whether it's your shoes, whether it's your clothes, whether it's your Apple Watch. And so we take the view we're just at the very beginning of this kind of mega trend, which is going from protection to prevention to prediction.
Maybe, Lars, if I could just add something very quickly to that point. I think what's been really interesting is, I think, Carl, going back to your point around, I don't know what chapter we're in, or, where I think the big distinction I'd like everyone to leave everyone with is that the first era of those big insurtechs, many of them have since gone public that we talked about, were really employing, I would say, a traditional Silicon Valley SaaS playbook, which was using venture dollars to subsidize growth. And what we have seen is a very sort of violent pushback away from that, where the fundamentals of actually investing in insurance begin to matter much more than the move fast and break things ethos of the last 10 years in venture investing. So as an example, I tend to believe that within InsurTech, we're starting to see a lot more of that focus on the insure side. Not to say that the tech side is important, obviously with things like AI and the big platform shift we're currently experiencing, those are massive enablers to that. But when you think about investing in InsurTech at the moment, we're starting to see a lot more of a focus on traditional, combined ratios, loss ratios, expense ratios, right? If you're an MGA, or if we're looking at an MGA, we're going to be looking at how much of that MGA premium is being ceded, how much of it's going to fronting, how much of it is going to agent commissions, to really understand what's under the hood. And so I think to that point, what's going to be really interesting to see is now that some of the tourist investors have gone away from InsurTech, understanding that it's not necessarily easy just to make money in InsurTech. And this, we saw a very similar theme in FinTech around the same time of the correction around 2022. I think you're going to see a much more of a specialization of investing in InsurTech, kind of like we've seen in biotech or deep tech or semiconductors of that ilk. And that is a very, very healthy correction, because you're going to start to see the best projects get funded. And I think that's going to really usher in a really exciting new wave of innovation with some of the best projects being funded and the best founders being funded.
I'd just like to add, so our approach, because we're investing in companies, we like to joke they're EBITDA companies, but what we're utilizing InsurTech and FinTech for is in our portfolio companies, that are up and running, for example, insurance brokerage or claims management, is which are the exciting products within InsurTech or FinTech that we can then bring to the companies. The businesses that we have are all distribution businesses at the end of the day, people-centric businesses. I think the exciting thing that we've seen in the last 5 years is the ability to utilize some of this technology, some of this InsurTech or AI especially, to make those people much more efficient and give a much better client experience at the end of the day. So we're a little bit different in that, we're not going to sit there and say that's the next great InsurTech that we're going to invest in. But our companies sit there and say, that's fantastic technology, that's a great product. Can we utilize this? And I think we're at a really interesting stage as we sit today compared to even just a few years ago, where there's some very interesting product out there that we can put to our distribution or make the distribution even better. So I think it's actually a very exciting time to see some of the developments that are happening.
Thank you, Richard. And I think Alvaro can explain the same thing in different words as well. So all of them have quarterly reports giving a view on how they see InsurTech and FinTech. If you haven't subscribed, subscribe to them, and then you will see the opinions. They really have fantastic webinars. You'll get insights on analysts working with them. But I wanted to move on, and maybe this is the turn for Alvaro. This was the overall view on how we see InsurTech, and I could add our comments here, but we have you on stage. So let's go into the next question. I really want to work on with you on a question: what is the right moment of time for the right type of capital? I think this is an area where you talk to young founders, they always see, okay, I have this idea and I go to VC and then I will be rich, which is the absolutely wrong thing. And we have seen, I think, Carl and Ali, you just said this, the life cycle of an InsurTech is different. We follow different streams, we're following different time and different success rates. So it's even more complicated there. So I wanted to maybe quickly, Alvaro, can you give us a view on what is the right moment of time for what kind of capital? Maybe we can add on different kind of approaches that you're driving in terms of partnerships, Carl, right? Or Richard, you're looking for the right partners to help on the technology.
Yeah, so I think it doesn't necessarily vary too much from what you see in other tech sectors, although I do think there are nuances to the InsurTech funding life cycle. If we talk broadly about the tech funding life cycle, you move from more high-risk, innovation-led types of funders to more stable risk, financially led and fundamental-based types of investors throughout your funding journey, right? As you move from an idea, a pitch deck, and two founders to having a solid business, right? That doesn't necessarily change for InsurTech, although I would like to point out that there are certain nuances in what an InsurTech can do, and I think it speaks a bit to the time that we are in, right? InsurTech funding is at an all-time low, right? Or not all-time, but since the past 5 years. And so I think, Ali, you made a comment of tourist investors leaving, right? A big part of InsurTech funding now means that you're going to be speaking to the right people. The people that are funding InsurTechs today are going to understand the models. You're not going to have to convince a Silicon Valley investor that has never invested in InsurTech in their life why InsurTech is an attractive proposition. The people that are investing today are here to stay, right? And so I think there's going to be a big move towards strategic VC money, whether that is from a corporate venture capital or from the likes of EOS and everybody here that are specifically focused on InsurTech, right? And it's really, the people that you want to be talking to today. So, how the funding moves across that life cycle, I think will remain relatively similar, but you'll be talking to InsurTech-focused VCs, people that understand the problems, people that understand that InsurTech and insurance is one of the costliest words on Google AdWords, for example, and will be and won't be looking for kind of move fast and break things approach, but rather building a fundamental business. So yeah, that's what I would say on the funding life cycle.
Yeah.
Maybe just a quick add to that point. I think you bring up a great point around corporate venture capital. And if you look at InsureTech funding as a whole, since the inception of InsureTech being tracked, traditionally corporate venture capital investment within InsureTech makes up a larger percentage within that particular vertical than almost any other sector out there, right? And there's a big reason for that, is that the majority of InsureTech startups and founders really are looking to collaborate and almost need the collaboration with the larger legacy players and the incumbents in order for them to survive and to be successful. And the legacy incumbents are looking to collaborate with InsureTech solutions such that they can grow and continue to stay relevant in the future, right? So if you think about the large corporates have distribution advantages, they have data advantages, obviously they have a big balance sheet, and you have founders that have a unique technology solution or unique business model that can really help drive a lot of value. So, within that, we've seen, the corporate venture capitalists invest within InsureTech companies, but alongside of that, there'll be maybe some sort of a fronting arrangement, there'll be reinsurance, there'll be AM Best rated paper that can really help that InsureTech company really get off the ground and be successful right off the bat. But I think, Lars, just to your question on the, where each sort of phase comes in, maybe I'll leverage to talk about private equity. My friend jokes and says, if you need a spreadsheet to make an investment, it's private equity. If you don't, it's venture capital. But all jokes aside, I think the big component that we see is when it comes to early stage capital in InsureTech, it mirrors a lot of what we see across the venture capital life cycle, which is you are really backing a strong founding team, a strong value proposition with a great target addressable market, and you're really investing in that company to help them get to some sort of product market fit, right? So anyway,
I think I wanted to talk on this because the question of the partnerships on investment criteria is some that I'm thinking about, right? We as QOC, we have invested in the last years. We do this kind of event to actually see what is the best startups, which startups can be helped to grow. We do this in the group, not only as QOC, but Fahad from QLM is here as well. So we do this throughout the group. We have our own unit, even though that we are not have the size nor the quantity of checks that we are writing, but we consistently write checks. But coming back maybe first Carl and then we go to Richard, to your model. How important for EOS Venture is that an InsureTech has an existing partnership with an insurance company to actually write the check on your side?
So, we have some criteria, but it depends what type of venture capital investor you are, to answer that question. So if you're very early stage, very early stage, some funds will tell you actually that is not that important. For us, our model is focusing on this kind of around pivotal Series A. And the reason why we do Series A is that we have a very vast network of insurance-related and insurance innovation-related contacts, which we like to bring to the table in order to help the target company to grow. We have only or virtually only insurance companies investing in our fund because they're very keen to kind of participate in this ecosystem. So for us, it is important that the companies in which we invest have actually already some track record with partners, insurance partners, financial services partners, so that we can help bring our, as much as I hate the word, but this ecosystem into the company and help accelerate growth. So to your question, it is quite important that we have some commercial or that we see some commercial relationships. We don't have any science, we don't have any equation where we say we want at least X million of ARR, we want to have at least X numbers of clients. But there needs to be a clear pipeline of demonstrable POCs having gone into production, as well as a healthy POC pipeline to prove that actually the clients are thinking that the product is viable and that the company can actually scale to some extent, at least, the whole production process.
Thank you. Maybe Richard, I think you have a little different kind of investment style. So maybe how does this fit in?
Yeah, I think I can give actually a good example is that we're looking for the best thing that is for our investment. So on the insurance side, we're actually, we own two investors in two insurance brokerage companies. We've also invested over the years in things like claims management. And that's what I'll use in this example where we saw a very interesting element of being able to use data, use AI, etc., across the claims management process. If you think about it, you know, the corporate that's using a claims management company, the person that injures themselves, etc., everyone wants the result that it's as easy and quick to get that person back to work as possible. Now, looking at what products there were to actually enable that and make it a better process, what we actually saw that it was best to go and actually fund a tech startup that was working in this space to get them to give them capital, get them to develop it and customize something that answered all the pain points. So that's actually an example of where one of our companies actually funded a business early stage, helped them develop their product so they could then go on and sell it to other people, but was developing something that was really purpose built for that company. So that's one area that we do it. The other approach is looking and saying, look, there's some good businesses out there. They've got clients. It's demonstrable. Let's use that product for that brokerage system. And, you know, brokerage in the US is an area that a lot of people in private equity have been investing in. It is very different from everywhere else on the planet. You know, I'm originally from the UK, where 20 years ago, you just went online and bought insurance. You cannot really do that in the US. You use the example of Lemonade and others. Because of the intricacies, the regulatory system, the state system, everything there, you have to, it's people are involved, but the technology is pretty awful. I have an app on my phone for one business, for the brokerage that I use. My 11-year-old son could probably build a better app. It is awful. So what I would recommend people, anybody who's got any good insurance management systems, agency management system, technology, the US is a huge area where brokers are really trying to get the best thing going. So, you know, anyone who's got anything good, let me know.
Thanks, Richard.
Can I just add a bit of a regional context?
Let's do a bit. I have two more things that I really want to discuss with you on here, and we have a minute. Go for it.
Okay. So, I mean, again, we basically invest in tech ventures, InsureTech ventures, starting from the UAE and then hopefully looking to expand, right? Completely different sort of markets than what probably you all are investing in. The region actually within insurance is one of the few industries where the markets are big enough that we genuinely see tech exit potentials, right? Because if you look at the GCC insurance premiums, it's about $35 billion, but the penetration is still about 3% of GDP, which I think globally is about 7 and 8%. So if you just take it at full potential, it's a 100 billion premium market. And the key thing which we like to see is to always see the business model for a lot of insurtechs. If you're looking at a SaaS model, which is charging $10,000, $50,000, that's a very limited market size because there are like 10, 12, 15 customers here. As soon as you can embed enough that you're getting a share of the premium, that's when these become really interesting business models and scalable businesses for us to look at. So I mean, that's something which we've tried to see is, are you able to get a share of premium from whoever you're serving?
Yeah. Thank you, Divya. So I will try to, I think we have 3 points left that I want to discuss, but given the time, and I think we could talk easily an hour. But I wanted to come back to a topic that you just mentioned, exits. Because in the end, you invest in companies and somehow your fund ends. So there need to be an exit. And this is where InsurTech or the founders are always looking for. But I think the elephant in the room, I believe the elephant in the room is what's happening right now with AI and Gen AI. So it fundamentally changes the way, I strongly believe it fundamentally changes the way how we as insurance companies operate. So the playbook that we mentioned, the chapters of the playbook, we don't know how those playbook will work out. Because we as insurance companies right now, we don't know how our back office will be in the next 2 years. Yes, we're using certain things. We're using this, where we see tomorrow, a couple of companies helping us new products. But on the core, I believe fundamentally that just getting software from the outside, just getting some AI model from the outside will not work out. But you're the right ones to talk about. So let's focus on how do you see the exit landscape change in the next years, given that we actually don't know what AI will do with us in our own business.
I
Please,
can go quick.
you have 5 minutes. This is what I want to finish the talk, okay?
I mean, I think AI adoption is not a matter of if, it's a question of when, right? And I think, I mean, if you look at pivotal moments in the past, industrial revolution, internet, I mean, it's hard to imagine a company starting without a website today. The same would be the same for AI adoption, right? But if you look at previously, a lot of these were outside innovations which you can bring inside. But AI is something you need internal tools, you need a culture of innovation, you need strong data sets internally. Without that, you can adopt an AI, but it's not going to be contextualized to your use cases. So I think we're probably going to see a lot of acquisition intent coming in from companies. And if you look at the last acquisition, I think Munich Re did, they acquired a EHR company, right? Why? Because it's giving them data sets from healthcare, which they otherwise would not have. So I think the acquisition intent is a lot stronger with the need for AI. And I think the other thing to note is we're kind of entering a time when black swan events are no longer black swans, right? I mean, you look at what happened in Dubai a few weeks back. I think it's there's a prediction it's going to happen every few years and not every 25 years. So I think with climate, with cyber, new types of risk which have never been underwritten in traditional manner. So a lot of scope for potential over there.
Let me offer a slightly contrarian view, right? 2 weeks ago in Europe, we had 3 seed deals, not in InsurTech, just AI deals, that raised $20 million on $100 million pre-money valuations with 0 revenue, okay? So right now, the AI hype cycle is at the peak of inflated expectations. And there is a lot of mistakes that we're currently seeing in the market that we saw in 2021. You know, sadly, I think the investment community has a very short memory. And so what the biggest challenge I see when it comes to exits, because you asked about exits in context of AI, is the valuations of these companies before they've been able to actually prove out what they've been able to do and generate any meaningful revenue is actually quite concerning from an exit perspective. And so I think the view going forward is AI will be table stakes for all companies that have technology-based business models. I don't think there's going to be any disagreement around that. But I think in the short term, there's going to be a massive disconnection between what these companies are valued at and what someone is willing to actually pay for them. And that is the big issue that I've broadly seen in InsurTech, which has hurt, I think, our exit environment in our industry, is that companies were able to raise a lot of money at very big valuations because insurance is a multi-trillion-dollar global industry, so it's very exciting to invest in. However, insurance at the end of the day is a get-rich-slowly business. And these are businesses that take a while to develop sustainable moats and revenue. And I can't see a big insurance carrier that's used to doing M&A deals based off price to book to go and pay for these AI valuations, right, going forward. So I think in the short term, Lars, I think this may actually hurt the exit environment. Long term, I definitely see this as being as a tailwind.
And I think on the, sorry, I think, okay, go ahead. I think on the private equity side, the only thing I would say from ourselves is that as you look to exits, everyone is looking at your insurance brokerage, your claims management, whatever business it is. Do you have technology in it? Because there are the multiples people are going to pay on exit, whether that's the public or private markets, they're going to be looking to say, do you have a technology growth in there? So whether it's AI or other technology, that I think is very, very important. And as we look to grow business and exit and others as well, they're trying to transform these businesses. So I think there's an element of it's going to be very important in the buyout world for people to make sure they have these technologies, which is good for the ecosystem generally.
I would only add that I think in the short term, you know, no big changes on top of course, valuations change, etc. You know, everybody needs top line growth in the insurance industry, the brokers, the insurance companies. So they're going to be keen buyers of, you know, attractive players. The software companies, the private equity firms who are looking for cash generative businesses. I think longer term, the exciting part of what is going to happen is that with the integration of insurance and technology, insurance is going to become an important added functionality to a lot of businesses. And whether you are a you know, manufacturer or a service company or whatever, the ability to integrate insurance in very different ways, kind of ultimately risk management is going to be multiplied by 1,000 times. And that is going to increase and create very interesting exit opportunities for us.
That's 10 times, right? Maybe Alvaro, emerging markets, AI, do you see this there as well?
Look, I think in particular, it depends on the stage of development of a lot of the countries that we see. Generally, our thesis around AI in the region is quite strong, but because there is a lot of tech penetration here already, there is a lot of infrastructure. People are clearly, talking about this. In other, we take a look at Africa, we take a look at Latin America. Generally, there are a lot of other problems that need to be solved, and it's definitely can be an enabler to solve those problems, AI. But just slapping AI on a deck is not going to necessarily solve the problem, right? So I do think there is an opportunity, but there are also a lot of currently strong businesses that are not necessarily AI enabled that are solving the problems to a certain degree in the other emerging markets where we look at.
Thank you. Thank you, Alvaro. Thank you, Ben. I think I would love to have another hour with you in private or here on stage, but unfortunately we don't have. Thank you very much for coming over, far away. So thank you very much. Hope to see you soon. And a couple of you we have tomorrow in panels as well. Thank you so much.
Thank you, Lars.
Having said this, looking at our team, I think we still make a break, right? I think everybody deserves a break now. We will be back at 1. 1? Okay, we are back at 1 with the final pitches that we are missing. Thank you very much. See you later. The vote is over there, okay? So just you find the way.